SMF MMTs, welcome to October 1, 2010. Well, MMTs, you've been doing extremely well. For the last 8 days, you've been selling short on the top end. You've been using the bear. You've been using the bull. All of those live trades you've done all this week and last week have paid off, selling into that resistance. Now, let's talk about the greatest rally in 71 years. So, basically, the U.S. markets have this big rally. You haven't had one like that since 1939. Now, what we're going to be doing with our MMTs and others who would like, you can send an info at stockmarketfunding.com. Basically, what I am going to tell you is that we had all of these various rallies in the 1930s off the Great Depression crash, and we did. And we have covered that over the last, well over 2 years. Going back to 2007, as before the markets were going to crash, of course, we had told people, and whether you were in denial or not, the stock market does not care about denial. You can have your view. You can do whatever you want. I'm going to tell you right now that we had the biggest rally in 1939 in U.S. equities. We also had those very same rallies, just like the rally that we called in February of 09, that we would put a bottom in the market and have a tsunami rally. Well, I'm sorry. All they did was buy back short interest on the indexes. So when you've been short for so long, when you buy it, that makes things move up. Well, we moved up. We re-leveraged. We went to high deficits. We done everything in 2010. That was a carryover from 2009. And the thing about it is, if the S&P can get above this 1154 handle, that's half of that bar. That's what we're waiting on. We're going to have a gap up this morning. But we have had the greatest rally. And we do have a bull weekly buy signal. There are lots of things that are happening here that could break higher. The thing that the MMTs want to know is that for the new MMTs, that is, other people are worldwide traders, are people in different countries. You probably need to get together, and other people in the network need to go back, and I'm going to give you a training session of all the bear and bull rallies since 1825. And it's going to be another special because people have a tendency to forget exactly what was happening then, how the stock market tape can rewind itself in various different types of behaviors when in very low economic environments and stimuluses and all the whole ball of wax. But let me just be honest with the people that may be watching the video. Now, MMTs are always taught. They know what I'm talking about because this is who this is for. So basically, what I am going to tell you, MMTs, we're going to keep going up. We've had the greatest bull rally, but all rallies failed in the 30s. Every one. As a matter of fact, there was a time where we had one big rally like in 2009. It came up, it fell, it came back down, it went back up again, and then failed again. And basically, we're seeing a lot of the similar tapes that were happening then. But here's the focus. Here's the focus. It did not work. To the long side, once it got up to those higher levels, is where the MMTs are going to make a fortune when the time is right. And when we get through this election, and we have this big election coming up in November, and that's caused a big rally, we're going to see if people want to start off October the right way. But MMTs will continue to sell in and sell short into there. If I get above this 1154, my next area, as I've done specials already, and they're all on stockmarketfunding.com website, or go to the YouTube channel and get your videos, because if we break up above there, it's going to be 20 handles above that 1150, so we're looking between 11, let's just say, let's keep it simple, a little bit right below 1175 on the S&P. Another thing that I want you to understand is that if we can break it with momentum with that weekly buy signal, then we could buy some at the money 1150 calls, and at the very same time that we buy the 1150 call, if we are to break out, we will buy this 1150 put below the market. SMF MMTs, I have pulled up the 1150 call. I have pulled up the $1,150 call option at this major weekly down bar. Now, like I have said all week, is that versus that 1150 put is very deflated. It got down to $14 yesterday, but here's the key to the trade. MMTs is that when we run up, and if we fell there at that 1155, 1154, MMTs, the way that this trade works is just as we did it yesterday. When they take that market up to the higher high, and when those bull funds start to sell off, for 8 consecutive days in a row, we have sold the top of that S&P. It has yet and has failed to close above 1150. Well, you know, naturally we have call options that go out to 1190 in case we break out, but we bought those a month ago in the Great September Rally. But let it be known here today is that we're looking at this ratio here. And what we're looking at is where do we get the 1150 call in case we want to break up through here to that 200-week moving average, as we said 2 weeks ago, of where the upper end of the S&P was in our SMF trading platform using our weekly charts that are mathematically coded to where these price levels are going to go. So basically, we're going to take a look at entering wholesale on the 1150 put. We're going to also get that 1150 call as cheap as we can. You can see here that people were buying 15,000 contracts yesterday's volume to 2,760 volume of the put side of the trade. Once again, during the live trading day, SMF, MMTs, it's all about getting the right entry and the right exit, both at wholesale versus the public markets who love to buy retail. They don't have the market making skills that you have, SMF, MMTs. They just don't. They never will unless they get trained, right? So basically, you're going to take advantage.